Hi guys, welcome to my channel. I'm Jake, a lad from the country in Australia, and it's a nice, slightly breezy day, winter time here. So I'm going for a walk on a Sunday with my dog. You can't see him there, Charlie. And I thought it'd be a good time to make a video. So it's pretty quiet, everyone's out and about. And I just want to go over some things about the overall markets, the crypto and stock markets, and also the bond markets and etc. So first of all, let's talk about Twitter sentiment. I see on Twitter, there's a lot of people that are bullish mainly, and calling for higher prices, calling that Bitcoin's in a accumulation zone where it's trading sideways and waiting for a breakout to the upside. And I see a lot of people posting just resemblances of previous times, being in similar points in history, 4 years, going back 4 years, for example, seeing where Bitcoin is. And I see not always history repeats, it rhymes, but not always repeats. So you can't rely on past data, especially if the economy, the underlying macro economy is different. And if it's different, it's not as favourable like it was 4 years ago in the last cycle, where the Fed was already cut rates and they already bring them down to near zero, and inflation was under control. We had a worldwide pandemic, and stimulus checks were coming out. Well, you know, we had pretty much max panic after the big crash we had in March 2020, and then we had, you know, a bull market essentially after that, as the Fed started buying assets on their balance sheet. And yeah, things were easy, times were good. Well, not for a lot of people who were stuck at home, but I mean for people receiving the stimulus checks and yeah, getting early in the markets. But this time round it's a bit different. It's pulling me all the time. Anyway, so yeah, it's a bit different this time round. As the economy's really tightened up, rates are really high, and yeah, it's not looking quite favourable for the average consumer. And going back to Twitter, so we see a lot of people are just too optimistic, and I see a lot of people that are posting, a lot of engagement. And you go on a site like Google Trends, for example, and you see that on Google Trends, search the term Bitcoin, and we're nearing the lows of the lows, like all-time lows. Like we're trending really, we're heading towards that direction anyway. Sharply declining in trend, especially over the past 5 years and of all time. So yeah, I'm not seeing a lot of bullishness there. So a lot of people on Twitter, I'm not saying everyone's bullish on Twitter, there's people who are bearish too. As you can see, he sniffs, stops, starts, can't get enough of it, he loves it. You've got to see who else has been in his territory. So yeah, I see on Twitter there's a lot of people posting resemblances from the past, saying that we're in similar periods, 2020, or at all-time high. Bitcoin's at all-time highs, so we must be in late 2020, meant to accumulate before we go higher. Now, I don't see that simply. I don't see it at all. I see there's this cycle chart that I saw on Twitter that resembles the I'm just trying to think what the chart was. It's like a business cycle chart. It's like a sine wave, goes up and down, up and down. Currently we're in the downwards bound of that sine wave, and we're heading higher. Not to say that we can just pull back down again, so something's for doing that. It's all looks too good to be true, and I'm just not seeing. So Google Trends is not showing me that there's a lot of interest at the moment. So I just see a little more downside in the markets, unfortunately. So that's my sentiment take there. Also, I want to talk about ETH. ETF, Solana ETF circling around now. I think Fidelity or VNI, one of the two, is starting to file, getting ready for a Solana ETF, preparing that one, and I think it's an absolute bonanza, especially all the meme coins getting launched on there, and it's not getting quite a good hype, a lot of pump and dumps. What's really held up Solana really is that engagement. It's not really the fundamentals, essentially. Network goes down a lot. There's a lot of questionable things on Solana. So, yeah, and the interest won't be as quite there as an ETH or Bitcoin ETF. I just see the ETH one getting some inflows. You know, a few billion over a year or so they're predicting. I think, I'm not sure exactly who it was, but I think it was the Bitwise CEO was saying projections around 4.5, 5 billion or more coming into a year or 2 years of ETH, which is quite low, which, you know, we'll see how that goes. I think the inflows, we'll see. It's very, yeah, it's Wild West essentially. It's ETH, is it classified as security or commodity? We don't know. And that clarity that we don't have makes it a bit harder for investors to keep going. Come on, let's go. So yeah, I think the inflows will be pretty underwhelming. I don't see a lot coming there compared to the Bitcoin. Bitcoin ETF launch was absolute. It was breaking records left, right and centre. It's overtaken silver as, you know, it's the most flows in ETF. It's catching up to gold pretty, you know, what it's out to achieve in the very early stages of its launch, in 2004 or so. So, yeah, Bitcoin is on the charge there when it comes to interest ETFs, but ETH, I do see a slowdown. I don't see that many inflows. I do probably see more than that amount of inflows, what YCO was saying, but we'll see. We'll see what happens there. The Solana one, put that on hold for a while. It's not going to happen until that gets classified as a security or commodity. We'll see how that goes. But it's too soon to start calling all these different altcoins ETFs. I think it's ridiculous. I was hearing a Doge ETF, like Luke Belmar or someone like that, you know, put it on his Twitter feed. There's going to be a Doge ETF. He did call the ETH and Bitcoin ETFs, but I don't think Doge one's coming anytime soon. Meme coin ETF, imagine that. I mean, God, what did we come to? So yeah, I do not see, especially the ETH one, a lot of interest. I think it's by the rumour, sell the news sort of event. When it launches, it's not really going to drive a lot of hype. As I said, the sentiment is, everyone just struggling at the moment. And the last things I think about is a crypto coin launching an ETF. And yeah, there's just so much else going on in the world, you know, the presidential elections and so forth. Whether it's going to be breaking news, I don't think it will be. It'll just be sort of a quiet, you know, release onto the stock market. So yeah, that's my thoughts on those ETFs. I also want to talk about some stocks. Nvidia, first of all, was the highest market cap in the world. Pretty crazy the run it's been on. It's been on a pretty wild ride, and so it outpaced Microsoft and Apple due to its demand and for its chips, its future forecasts, revenues, and its current earnings beats. It's been absolutely crushing it on earnings. So it's got some fundamentals to back it up. So whether it continues, if it continues to be earnings, or we've seen a top for now because it's had such a huge massive parabolic rise in price, and I think it's not very sustainable. It kind of reminds me of, I wasn't there, but I was born around that time, 2000 dot-com bubble, which saw Intel is the most valuable company in the world overtaking Microsoft. So it's a similar scenario of Nvidia taking Microsoft. So yeah, I see that coming to a resounding correction eventually. I don't know when exactly, forecasting for that one. The likes of Apple and Google as well, like they're on a big charge. They're just ripping through, and all-time highs, and Amazon done the same thing. But these stocks, it's Magnificent Seven, as you call them, they're crushing it. And it's only, I don't know exactly how many stocks, but there's a very small amount that are actually holding up the S&P and the NASDAQ. And it just can't, they're not last forever. I don't think it can, especially in this environment. There's a lot of money sloshing around. I know these big companies have still got, good healthy balance sheets. It seems like they do. As the higher rates kick in, then they've got to refinance their debt. It's not going to be quite the same. They're going to be selling off a lot of assets to pay that back. So it's a lot of hype behind those stocks. And I'll show you behind me along the railway track. It's so hard to hold your phone up. It's got a wallet phone, just flaps around everywhere. He stops and starts. I'm just getting used to this. It's my first time really recording while I'm walking and uploading it to YouTube eventually. So yeah, it's going to be great. Follow along for my intake of the markets. And on to the next topic we'll talk about is the Fed, the almighty Federal Reserve. We all like the Federal Reserve, don't we? Jerome Powell, these 12 Fed presidents, and the stuff they've been saying recently, like I was saying about talking about the stress tests of banks. They had 31 banks they tested, and they stress tested them pretty aggressive downturns. I don't know the exact numbers, but pretty bad conditions, like 10% unemployment rate, a 30% decline in the markets, and so forth. So it looks like a pretty full-on stress test, but results came in and they said every bank on that list passed, flying colours, like they just passed easily. So, and the JP Morgan came out saying that it's not quite true. So they debunked the Fed, literally, most powerful organisation in the monetary field. So anyway, that happened. It's also to see interest rates staying high for longer as inflation really remains sticky. And here in Australia, they went back up above 4%. So it was 3.8, I believe. Now it's 4% inflation. So we're not getting out of it anytime soon. I just see, inflation being sticky in America. That's really the market we've got to watch. Around the world, definitely they're struggling. Canada's inflation went up recently too, so they're not looking too good. And America's inflation is around 3.5%, I believe, or 4 CPI numbers. So I see that being sticky for a while until they contain it. And then cutting rates has to happen once they see progress there. As 2% target over time, as they mentioned, a 2% target over time, not 2%, and then they'll cut rates. It's over time. So they look at different factors as well. So they look at PCE inflation, which is a bit different. That came in month over month, lower than expected, 2.6%. So that seems to be in more the round of 2% they're targeting. Like if they're looking for 2% target, then their preferred measure of inflation is PCE. And then I think they're nearly there. So whether they're using as a gauge or CPI or core as the standard, we don't know exactly. Then we also look at tapering their balance sheet this month. So look at tapering at a slower rate, going from $120 billion a month to, I believe it's 80. Could be wrong there. Please correct me in the comments. It's a slight decline in tapering their balance sheet. So they're they're not easing yet, they're just still tapering, so no need to get too excited yet. The Fed hasn't been out of the woods, so you've got to watch out there. And also, one other thing, unemployment in America, 4%. And coming up next week is employment data. So we're going to see that come out. We'll head back, I reckon. Go back this way. Come on, let's go back. Let's go. Let's go this way, come on. Head back this way. What are you doing? Come on, let's go. No going for a swim. Got a channel there. I don't want him jumping in the channel. He already stinks, he's already dirty, so if he gets in there, it'll make it even worse. So let's go, come on, quick, let's go, come on, let's go, come on. So you won't go, right, come on, let's go. Come on, Charlie, let's go, come on. Come on. I'll let him off the leash real quick. Let's go, come on, this way, come on. So unemployment data, it's predicted at 4%, so it's going to stay flat. I don't see that happening. I see it go higher, 4.1, 4.2. See, otherwise it could stay flat, and we could be in a sticky situation there where that remains elevated, like inflation. So just not the uptick. Come on, let's go. He's all the way back there. Come on, quick, let's go. I don't know if I'll take him on one of these walks for these videos, it's just too hard. And yeah, I just see that being something that the Fed will be looking at very closely. You got ADP numbers before that, and then the official unemployment rate, and then non-farm payrolls as well next week. So pretty heated week next week. I don't see, it's not much this week to really look forward. It's just next week. Oh, sorry, next week, it's a weekend. Next week, it's going to be huge. So yeah, we'll look for that data to see where we're heading. Going forward in the markets, that could be a turning point. So I've seen some pretty bad earnings reports coming out of some companies. So whether we see more layoffs, like for example Walgreens and Nike falling 20 to 25% each. So they're pretty brutal because they're not looking at a very good forecast. And I see a lot more layoffs coming in the markets as well, banking and different sectors. So yeah, look at that. Also, presidential elections. I'm not going to say much about that. Either Biden or Trump, we don't know. Looks like Trump was a favourable bet there. And yeah, we'll see what he does. Whether they leave him in or he goes to jail or whatever. But I don't think that's going to really impact the markets. They say it does, but it doesn't really make a difference who gets in. Anyway, so yeah, because their policies are, you know, I see is not going to really move the needle in terms of the sentiment of the markets. I believe the markets will dictate on fear and greed. Companies starting to struggle. The Fed being too late to the party, as they did in 2021, they were late. They tapered, they transitory inflation, as I said. They're keeping rates high for longer, not acting soon enough. We'll see how it goes. Let's see a faltering consumer. We're seeing delinquencies up, credit card delinquencies rising. You know, we see consumer confidence not looking very good. Just the market sentiment in general. We see also PMI, Chicago, back to recessionary levels, big dip. They're not looking good in that front. And every time it's gone down, and I can show you that on the charts, but it's the manufacturing sector is definitely slowing right down, and services as well. So yeah, it's all looking good, and I think President Trump or Biden will really change a lot until there's a significant crash and a complete reset in the whole economy, essentially, and getting rates back down, print more money, keep running the deficit up. That's what they do, is run deficits, no surpluses, deficit. God, he's so far behind. And yeah, I just don't know. I don't see a lot on that front changing anytime soon. That's going to next year. So we'll worry about what's happening now and what can really affect our decisions going forward. Also, the bond market. Bonds have been going down for a few years now, and we see a chart like HYG, higher graded bonds, are starting to turn over, hitting resistance. It's not looking good for the high grade corporate bonds, and starting to diverge pretty heavily against the S&P and NASDAQ. And if they start to fall, we should see the stock market follow, because the bond market usually signals a warning before the stock market. And yields remain pretty sticky, so we've got to see the 2-year yield start to come down, and the Fed, I think, will act on that, and that'll be a leading indicator to say that we're definitely cutting rates. But that hasn't happened yet. It's staying sticky. So yep. And also, we got credit spreads around the world. What I've watched, they're looking they've got their bottomed out, and they're starting to spike up, which is sort of a risk off sentiment. The markets, credit spreads start to widen. That sort of favours the bears, essentially. So yeah, the credit spreads starting to rise around the world, and we see the VIX volatility index, all-time lows, getting there. Going back a few years ago, it's really, really down there. It's really, really low. So that's going to be, if that spikes up, that's going to be very, very interesting, I think. Also, currencies around the world, leading currencies, that gives an idea of what's going to happen, like the US dollar Canadian, I think. And that starts to break out. This wedge pattern, I think, is going to just absolutely be a very bad signal for the markets. It's starting to break up. The US dollars keep strengthening against the peso as well. That's breaking out. And the dollar index, DXY, is so strong at the moment. It's on a rampage. So it's all risk off. That's all these things adding up, Also, let's look at the last part. Just be strong out there. If you're invested, just be cautious. Start to take some profit off the table, I think. Start to be digital diligent. If you're in ETFs, then that's fine. If you're dollar cost averaging, it's a low risk ETFs. You're sitting pretty, which is good. Just be wary, be cautious. The crypto market, especially if you're in altcoins, they're bleeding to Bitcoin. It's low risk, outperforming high risk. And even blue chips in the top 10 are starting to underperform. Most are, but you have a handful like BNB and Solana that have outperformed Bitcoin, but the large majority haven't. So be careful there. And because Bitcoin has a big drop, that means trouble for the rest of the market. Okay, the alts will bleed to Bitcoin. I have to walk back this way. So slow, dog. Ridiculous. But yeah, I'll just keep this one there. But thanks for watching. Please like and subscribe, comment. Tell me if you like these sort of videos. It's not the best, it's sort of hard to walk around, and it hasn't been too bad. The weather's been pretty good. It rained yesterday, so it was a good time and chance to get out today before surprises us and all of a sudden changes. So yeah, it's holding up pretty well, and it's a good day for it, and it's good to be out there walking, exercise. You got to do it every day. I go for walks every single day, just about. So yeah, it's definitely interesting times we're going through. Everyone's struggling, trying to make ends meet, trying to keep up with the bills. If you've got any mortgage payments, it's definitely it's hard. It's so difficult. And they're talking about on the news the other day in Australia that the mortgage rates are going up. Which is not a good thing. It's a bit of a freak announcement, and if it does happen, we could be facing some hefty defaults and foreclosures. That's for the housing market. I mean, I'll look at some charts in the housing market, particularly as a home builders like the ETF that I watch, and that's suggesting that we're sort of diverging there, and we're looking at coming down. It's looking quite heated and not looking quite strong. So that's what I'm looking at there, and it's sort of looking at also the commodity prices relates to housing. Like timber is absolutely plummeting, so the demand for timber is not there. It's just not happening. People have really tightened up, so the prices have dropped for timber, lumber I should say, and that really affects people building houses, slowing down development. It's not looking good, but we'll see how the housing market goes, and the more supply comes on the market, we'll see if the demand can keep up. If it doesn't, there's higher rates. I don't think it will. We'll see prices starting to come down. We've seen a peak in the housing market. That's another concern that people have, because housing makes up a significant part of the economy, especially somewhere like China. It makes up a very large portion of the economy. And same as America, Australia, around the world, Europe. Housing is essential. We need housing, and that starts to falter. The rest of the market hasn't really got a leg to stand on. It's just a matter of time before this AI craze starts to die off. These meme coins start to fade off, which is they're starting to happen. These pump and dump celebrity coins and the likes. And alright, that's been a long video. It's been too long. So I'll just cover these topics with you today. It's been a good little walk. It's only a short walk, but head back home, and I'll probably go for a longer walk once I drop the dog off. It's a slow anchor. He's an absolute drag. But he's not too old, so he can still do it. He's got the exercise, and he needs to. You need to get him out. That's what it's about. It's about staying healthy and fit during these times, and just in general, just staying positive. And that's about it. So like I said before, please like, subscribe, comment my video. If you want more like this, let me know. This is something you like the format of. If it's too sort of noisy and I don't know, it's just a bit too much, then let me know. It's better to sit on the computer and talk about things. It's much calmer, but I like to sort of, may as well do it while I'm walking. So I was gonna walk anyway, so presenting this format, because out there is it's not looking good, but we'll see what happens, and things start to, the markets start to turn over. And if they do, I could be right. If I'm wrong, I admit to be wrong. Happy to be wrong. I would sit on the sidelines. So I'm not invested in the markets at all, any markets particularly. I'm saving up every week, stacking cash, because I believe the time is next year, the big bull run, crypto, stock market. So thank you for watching, and I'll catch you in the next one. Thank you. Cheers.